In this presentation, we will use tax software to consider the calculation for Social Security benefits on tax form. The software we will be using is Lacerte, owned by Intuit, the owner of QuickBooks. Other software should be similar in terms of the data input and the effect on the tax forms. In terms of our equation, we are up here in the income line. We're going to be dealing with the Social Security, which is going to be on line 5A. The key point here is that part of it will be taxable. We'll have to determine how much of it will be taxable, so we'll test that out with the software. Remember that you would be receiving the form SSA from the government. We're talking about Social Security benefits. We pay into Social Security as we work. Typically in our W-2, it's withheld from us. And then at that point later in life, it's got to be sometime after 62 usually. That's when we would think about, if we have a client that's over that age, we would start to say, okay, what's going on with your Social Security? When would your Social Security benefits basically start? When they do, then we should be receiving from the government a Form 1099, a SS-1099, which is the Social Security benefit statement. In this presentation, we will use tax software to consider the taxability of Social Security benefits, or the amount that would be included in income. We will be using Lacerte tax software, owned by Intuit, the owner of QuickBooks. The data input in relation to the software may be very similar for other types of software as well, which can help you with the calculations of the taxable portion of the Social Security benefits. Within our tax equation, we are on the income line. We're trying to decide how much of the income will be taxable. So when we think about the Social Security, what happened is the client or we put money into the Social Security, oftentimes with it being taken out of our W-2 wages as we work. Then at retirement, which is going to be sometime after 62 usually, then we would receive the Social Security benefits at that point in time. So if you're talking to someone that's older than 62 or so, then you want to start asking about, okay, when are you going to have your Social Security benefits? When are you going to elect them? There's different options on when you can elect the Social Security benefits. Once you have elected the Social Security benefits, then you should get the payments for Social Security, and they should then provide you with a 1099 form, which is going to be a Form SSA 1099. So anybody that has the benefits, you should be receiving that form. Anyone that's over like 62 or so, or 65, you're going to want to start asking, did you have Social Security benefits? You should have then received a Form SSA 1099. If so, Social Security benefit statement. That then is what we're going to use to enter the data into the tax return. Then we want to determine how much will be included in taxable income. Obviously, the software will help us with that, but we want to be able to understand what's going to be happening in the software. So we know that there's going to be a threshold then that's going to be allowing us to include a certain portion within the taxable income. Our objective, what we would like, is for less to be included in the taxable income, because if it's included in taxable income, it's going to be increasing the taxable income, and therefore we will be applying the progressive tax rate to it. So the general rule is, as provisional income increases, the amount that is taxable increases until the limit of 85%. So if it's under the limit, then it could be taxed at some rate below the 85%, from 0 up to 85%. Then if it's at the limits, then it will be taxed at the 85%. Now the limits are pretty low, so if you have someone that's making a decent amount of income, it'll typically mean that you'll be including in income of the Social Security benefits 85% of the Social Security benefits, which will then be applied to your ordinary income tax rates. The married filing joint is at $44,000, so anything above $44,000 taxed at the 85%. Below that, it's going to be taxed at some portion under 85% down to 0, depending on the modified adjusted gross income. The single head of household qualified widower limit is the $34,000. So up above the $34,000, then you're going to be including in the income 85% of what's being reported on the 1099, which will then be applied to taxable income, which will then be applying the ordinary income tax rates in accordance with the progressive tax system. Let's take a look at it in the software. Here we are in our mock 1040 problem with James Smith currently at the single status. So single status, we have the 100,000 in the wages, which is well over the threshold. Note that if you're talking about someone that got Social Security benefits, you might be talking about someone that's no longer working, might have some other form of income, such as distributions from a pension plan or something like that, 401k, retirement plan, distributions, or other type of passive income, dividends and whatnot. However, we want to keep it simple here with what we know. Let's just put in the 100,000 to consider the thresholds into the wages here, and so we can focus in on the thing we're considering, which is, of course, the Social Security. That's going to be down here in line 5. So we have 5A, which is going to be the total Social Security, the amount that will be on the actual 1099 form, then the taxable portion, which will be calculated for us by the computer, and we can just basically look at it and say, what's it doing? Does it make sense that it's doing that? I'm going to go ahead and jump to this form. I'm going to right click and jump in Lacerte. There's our form. I'm going to start with the 10,000. Now, notice also that when you get the 1099 form for Social Security, it'll also have Medicare that you can input into the data input field as well. We're not considering the Medicare side because we're considering the benefit side to see if it would be included in the Social Security benefit. Just realize that as you enter the data, you're probably going to enter those two things at the same time from the same 1099 form. Back to the forms. There's the 10,000 that has been applied. Social Security, we're well above the threshold, therefore 85% of it, or 8,500, included in the wages. We have the 100,000 W-2 wages, the 8,500 Social Security to give us that 108,500. Standard deduction 12,200. Taxable income 96,300. That then is what we would apply the tax on in page 2 or on page 2, and the tax being at that 17,293. So if we go back up to page 1 then, scrolling back down, if you were to think about that in terms of your worksheet to kind of consider how you might put this into a worksheet, double check it, we could go into our income screen that's going to be supporting the income line, the top line. And if we scroll back down, there's our 100,000 for the W-2 income. Social Security, we could say this equals, you might even do a little formula here, 110,000, that's what's reported on the 1099 form, times 0.85. Which is typically going to be the case if someone is over the threshold. It'll pretty much always be that 0.85. You can do a little verification calculation there. And then if we add those up, that's 108,500 back to the formula line, 100,800, standard deduct 12,200. That gives us the taxable income of the 96,300, which we should be able to verify on the tax form right there. Now let's take a look at our threshold and say, well, what if we go way down below in terms of income, that 34,000 in terms of the threshold? So we're going to say, all right, we're going to go below the 34,000 and let's go way below at the 20,000. So let's start it at the 20,000 and I'm going to go back to the forms and say, we're going to say now we have the 10,000 in the Social Security benefit, none of it being included in the taxable portion. So we have our 20,000 now in the wages, none of it and being included in the Social Security, although on the form Social Security 1099, we had $10,000. So if you were to put this in something like the tax software, you'd say, okay, the income was at 20,000. Social Security then, you're going to say, is at the 10,000 times, you can say 0, just to verify that calculation within your software. Bringing it back to page 1, 20,000. Nothing is included for the Social Security on page 1 here in the formula because it's not included in the taxable amount. Minus 12,200 standard deduction, we got the 7,800 for the taxable income. Back to the tax forms, and we can kind of verify that number here. Now, anything in between, then, we should have some kind of portion that will be calculated. We will typically rely on the computer then to calculate whatever range will be included of that 10,000 as we increase then the taxable income up to the threshold of the 84,000, at which point it'll be taxed at the 85%. Not taxed at, but included in the income line that will then be applied to the ordinary income taxes. So if we go back to the detail then, let's say that we include this at the 25,000, for example, and we're going to go back to our forms. Now you see that 2,500 has been included. If we were to see what the rate then would be that's included, 2,500 times or divided by the 10,000, That's going to give us 25%, 0.25. If you want to see the detail on the calculation within the software, they should have a schedule for it. Ours here. I won't go through all the detail, but you can then go through and take a look at the calculation, how they determined, in essence, the 25% to be included in taxable income of the $10,000 that we're saying was included on the 1099 form. Then when you go to your software, then you can figure out that percentage. You can go back into your data input screen. You could say, all right, we have this at 25,000 now for wages, 25,000. And then down here, we're going to say that we had the Social Security at 25%. That's going to be included. Therefore, we're at 27,500. That's going to be actually taxable in accordance with the formula, minus the standard deduction, 12,200, 15,300 taxable income. Back to the tax form, there's the 15,300. And then, of course, you could just test this up to the 34,000, right? If we went back over here and we said, all right, well, what if it was 28,000? And I go back over to the forms, we'd say, all right, now it went up to 4,000 and that we're at 40%. What if we go back over and say, how about we put it at 30,000? And that's going to be at now the 5,350. So we're over 50% of the 10,000. Let's put it at now 33,000. And that's going to bring us up to the 7,900. And then if we bring it to, of course, the 34,000 and go back over, that's going to bring us up to the 85%. And that 85%, 8,500 of 10,000 will apply all the way up now. If we go back up to the 100,000, then we're going to have the 85%. So a fairly low threshold over that point. 85%, again, included in income, not being the tax rate. That's how much of the Social Security benefit included in income that would then be included in the taxable income, at which point we would then apply the tax rate to the taxable income on page 2.